the best of Money Matters.
Market View on Money FM 89.3.
That's right. You're tuning into Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares were higher as investors continue to track the outlook for global interest rates. So if you look at the Straits Times Index, it was up 0.52% at 4,298 points at about 2:35 p.m. Singapore time, and that is with a value turnover of some 716 million Sing dollars seen in the broader market. Now, off to the closing numbers, the STI ended in the green, up 0.52% at 4,298 points as well at the close. We're looking at a value turnover of 1.29 billion Sing dollars. Now, gainers outnumbered losers, 293 versus 248. Top advances for today, we've got for you DBS, UOB, and Prudential USD. And top decliners, we have here GMH USD, Jardine Cycle and Carriage, and Helens. Well, in terms of counters to watch, we do have ST Engineering and also ComfortDelGro. And that is because ComfortDelGro became the sole owner of taxi operator CityCab after acquiring all of ST Engineering Land Systems shares for a total purchase consideration of 116.3 million Sing dollars. They also have movements in the Hong Kong Hang Seng after Alibaba's stellar showing to gold prices climbing to a new record as investors sought out safe havens. We've got more international headlines in focus. And joining me on the line today is Too Jun Cheong, dealing manager from Moomoo Singapore. Jun Cheong, welcome back.
Hello, Tian Tian. Thanks for having me.
Great to have you. And Jun Cheong, let's start with the Singapore stock market as usual. How did the STI fare today? And any surprises when it comes down to notable movers, say DBS? Because I understand we've got a Bloomberg report which said DBS's plan to buy a stake in Alliance Bank Malaysia has stalled.
I think for local Straits Times Index, congratulations to everyone that's trading there because we did pass. Yes, we passed the 4,300 mark today. Of course, we did close at the 4,298 mark.
Yeah.
I think the top gainers were Genting Singapore and as well as Singtel trading at the $4.40 mark. For the DBS Bloomberg report, it does seem that the stalling of the stake in Alliance Bank did prove to be a positive one. Although overall all the banks did well today, DBS share price did close at 1.02% higher, while over in Malaysia, Alliance Bank actually closed unchanged. So while the M&A plan stalled, investors will certainly be reassessing other near-term catalysts that may shake the share prices. Overall, I guess the Singapore market was balanced with many of the defensive names holding strong. And sectorial-wise, there isn't any significant blowout either.
Jun Cheong, let's talk about some companies to watch. ST Engineering and ComfortDelGro. Now, ComfortDelGro is now the sole owner of, or became the sole owner of taxi operator CityCab after acquiring all of ST Engineering Land Systems shares, and that is for a total purchase consideration of 116.3 million Sing dollars. How have investors reacted to the news thus far?
So, of course, the move does make CDG the sole owner of CityCab, which could be a strategic move as it does simplify their taxi portfolio. It can unlock some operating synergies for their fleets or through dispatching or even towards their overall branding for ComfortDelGro. However, share price-wise, ComfortDelGro actually only closed 1 cent higher at 0.68%. And the trading volumes were actually lower than the past 13 trading days. For ST Engineering, on the other hand, like you mentioned, it's actually one of the top gainers today. It closed about 1.71% higher. I guess for ST Engineering and their investor, this sale is actually a non-core divestment for the company, and it does help to streamline the company's portfolio and free up capital. ST Engineering also did note that they will use these proceeds to actually pay down their debt. And that will actually result in about an expense savings of over 4 million on an annualized basis, which is probably a good thing for the company, which is why we are also seeing the share price going up today.
And Jun Cheong, another counter that we want to keep our eyes on is EV maker NIO. Now, NIO delivered some 31,300 vehicles in August 2025, which is a 55.2% increase on the year. But are the numbers in any way sufficient to bolster investors' confidence in the company's stocks?
So for NIO itself, the numbers certainly do help to bolster a lot of investors' confidence. I'm just looking at the US listed for NIO. Of course, they are also listed in Singapore. But for the US one, over in June, it rose about 41%. And for August, the share price rose about 31%, with the trading volumes over in the US market surging to those that we have only seen in last year's September. So that's a very good sign for the stock overall for NIO. NIO is also, for those who are interested, they're also looking to be launched in Singapore in Q1 next year for EV lovers. However, I do believe that while the delivery figures, they are important, for shareholders and investors, their focus will still be on margins, pricing pressures, and of course, profitability for the EV vehicles. Because this is especially so because a lot of this EV, they are actually pricing each other out, and they have remained really competitive, both of course in China as well as in the markets that they are in. So higher deliveries really do not automatically translate into higher profits. So for NIO itself and for investors, the future earnings and the figures will be crucial to see if NIO and the NIO share price can continue this pace.
And now across the region, Jun Cheong, let's have a look at Alibaba and also the Hong Kong market. I mean, Alibaba soared almost 20% yesterday on bumper results and a surge in AI revenue. I mean, shares were up earlier today, but when I look at the closing numbers, I believe they closed in the red. So how far did Alibaba's showing today pull up the performance of tech shares on the Hang Seng? Or do you think markets have sort of lost the steam, so to speak?
So Baba actually released their earnings last week. So on the Baba US ADR, so the one that's listed in the US, it closed over 12.9%. And over in Hong Kong, like I mentioned, it soared nearly 20%. Investors were certainly positive on the sharp jump in the cloud. And then they do have the AI revenue, which we also saw that the Hang Seng Tech Index closed 2.2% higher yesterday. Also, like you mentioned, Tian Tian, today the market, the Hang Seng Tech, of course, it went down and Baba did close in the red. So the momentum for the entire Hong Kong tech sector, it fell today with the index closing off 1.22% lower. And then for the 2 trading days, it was still up at 0.95%. So that being said, Alibaba's results still gave a short-term boost to the tech sector, and investors are still watching whether this is a start of, sustained re-rating, or is it just a one-off relief rally. So a lot of Baba investors have seen a lot of this one-off relief rally. So in other words, it did lift the tide for the index, but whether the tide holds really depends on the follow-through from the rest of the sector. And from a technical and charting perspective, it does look like the Hong Kong-listed Baba has broken out from the short-term trading range.
I see. Now, if you're just tuning in, we're now in conversation with Too Jun Cheong, dealing manager from Moomoo Singapore. Well, Jun Cheong, let's have a look at what's going on in China. I mean, Chinese investors, they are apparently borrowing a record amount of cash to buy local stocks, further fueling a liquidity-driven rally that shows few signs of stalling. How far is this a cause for concern for investors looking at the Chinese stock market right now?
So according to the various reports, the margin financing has actually reached a record high in absolute dollars to 2.29 trillion yuan. Personally, I do see this rising margin debt as a double-edged sword. So liquidity is clearly back to the market, and domestic investors, they are certainly rushing to chase the current rally that we are seeing. Of course, this is really helped by easing monetary conditions as well as the central government encouragement to the equity market since the Chinese market did fall off since the property crisis. So in the short run, this leverage acts as, we can say it's a rocket fuel. It powered indexes higher, and it does boost the turnover. The concerns that we are seeing, though, is actually sustainability. We actually seen this happen before in 2015 with the use of heavy margin amplifying both the upside and, of course, the eventual downfall. So while today's margin debt as a percentage of the overall market cap it's still below the 2015 level. The rapid pace of increase in margin, it does pull up some red flags. It makes the markets overall to be more vulnerable to sharp pullbacks, especially if a lot of the sentiment or even policy signals become less supportive. Another concern is actually margin call that can escalate the issue further, leading to forced liquidations by brokers and the realized loss for the investors as well.
Now, speaking of China, Jun Cheong, Chinese President Xi Jinping has secured an agreement from partner countries to set up this new development bank, realizing a long-time ambition for the country. Now, what does the move mean for investors then?
I think it's quite a significant step for China. So the new development bank really shows Beijing's ambition to build their own global financial system. Something we have seen before with the Belt and Road Initiative. So for investors, I guess it's a double-edged sword again. So one hand, it does mean more opportunities in infrastructure, green energy, tech projects that are backed by a lot of Chinese funding, something that we've seen across Southeast Asia a lot. On the other hand, it really does highlight a growing geopolitical fragmentation. So it does open some doors, but investors do need to understand that it's both a growth and also a reminder to be mindful of the political and policy exposures when they are investing into projects that is tied to China-backed initiatives.
And Jun Cheong, further away, let's talk about the U.S. U.S. Treasury Secretary Scott Bessent has expressed confidence that the Supreme Court will uphold U.S. President Trump's use of a 1977 emergency pass law to impose sweeping tariffs on most trading partners, but said the administration has a backup plan if it does not. Now, there are some questions surrounding the legality of Trump's tariffs. I mean, a federal appeals court ruled that most of his tariffs were issued illegally. So how would you read into that, and how have investors read into the news?
Right. So this really tells us that the tariffs, they're probably not going to go away anytime soon. Yes. So if the Supreme Court do uphold the 1977 law, it basically kind of like reassures that the president has wide powers to impose this sweeping tariff. But even if they don't do it, the Treasury is already talking about the backup plan, which shows that the administration is really committed to keeping tariffs in play one way or another. So for investors, this has clear, I would say, implications. So your exporters and companies reliant on a lot of these global supply chains, they will face ongoing headline risks and potential cost pressures from these tariffs. On the other hand, more domestically oriented U.S. companies, such as certain, let's say, consumer staples or infrastructures, may be relatively insulated from this kind of risk within the U.S. itself.
At the same time, Jun Cheong, we're also seeing gold hitting a record high. Do you think there's more room for gold prices to rise given uncertainties on the trade front and also, aside from that, growing concerns over the loss of Fed independence? I mean, Bessent just told Reuters that he thinks that the Fed has made a lot of mistakes, even though it should be independent.
Yes. So gold hitting a record high really reflects a lot of certainty out there. So the one we talk about, tariffs, then we have the questions on Fed's independence, and there is also the ongoing conflict in Europe and Middle East. What's really pushing gold higher is really falling real yields and continued central bank buying. So it's not just in U.S., China, even Singapore as well. And this is also from emerging markets. So could gold go higher? I would say yes, if trade tensions stay heated, or the Fed really comes under more pressure from the Trump administration. The flip side is the U.S. dollar, if it strengthens, or if the market goes on a strong risk-on rally, gold could take a breather. If we look at the futures market right now, the U.S. dollar is going up, and then we are actually looking at a gold price coming down. So really for investors, gold remains an effective hedge in this geopolitical environment, this very messy environment for most people. But like all hedges, it is important to balance, I would say, exposure with broader portfolio and monitor macro developments closely.
All right, thanks so much for the insights today, Jun Cheong. That was Too Jun Cheong, Dealing Manager from Moomoo Singapore. Thanks so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.